Brooke, it's great to have you with us. Thanks for the time today.
Oh, thanks for having me on. It's a pleasure. I got to get you guys showing GTech as the ticker on the front scroller there instead of some of our competition from the ETF side. But it's great to be here this morning. Thanks for the time.
Well, I'll tell the booth. I'm curious. Talk to me about autos and EV chips, because to some degree the street is still reeling from the Micron and GM guidance.
Yeah, sure. When we look at the outlook for semis broadly, full disclosure, we do think there's weakness out there in certain parts of the market. So PCs and some handset related stuff, you are seeing some weakness in those areas. But we actually think the EV build and what's happening on the auto side is very supportive to some of the vendors, especially those names that are taking share out there. So, from our fundamental view, what we're really trying to do is understand which companies we think have opportunities to grow their business, to drive margins higher. And we think there's a couple names out there in the semi space that are specifically levered to that can do really well over the next year. So a name I'd point you to is On Semiconductor, where, we think this one is really set up nicely for the next while. It's got a new management team. It's focused on moving out of the commodity parts of its business and moving into higher value, higher gross margin pieces of the business. And we think the market's not reflecting that yet. So we really like that name.
You mentioned KLA as well. Does that mean that if we get more headlines about trimming CapEx here and there, that semicap holds in?
We do think that the outlook for semicap is incredibly positive. The risk on the outlook for the wider WFE spending probably has to do with what's happening at Intel relative to the wider subset of the market. TSMC is going to continue to spend robustly, we think, across the next cycle. But KLA specifically, it has this great opportunity to take share, and you see that in their design wins going forward. And then secondly, the company just announced a week or so ago at their Analyst Day that they were going to buy back about 15% of their outstanding, again, showing real confidence in the underlying business fundamentals there. So it's another name that we like that's a big holding across our portfolios.
Brooke, how comfortable are you with the demand environment, and as we head deeper into the second half, how that might affect particularly enterprise software, given that some of the consumer concerns and then the overall business spending concerns might trickle through?
Yeah, so one of the areas that we think is going to be relatively resilient is enterprise software spending, and specifically in some of the names that are helping companies either engage in digital transformation or are levered to cybersecurity. So, names that we like there, we think that numbers are appropriate. We think there's upside. And then, most importantly for how we look at the market and how we invest, we think there's company-specific things that are driving, either estimates higher or margins higher across the board. So, we do think that this is a window where active management, where picking the individual names that are going to work is going to matter massively. But we have some names that we really like out there right now.
So, Brooke, give us some of those names when you're looking at enterprise software spending. Are companies going to the big suites, the big players like Microsoft that are using this time to capture more of that spend, or some of the best of breed that are now looking at cost controlling measures?
Yeah, so, I have observed in my history of investing in tech that as you move through harder economic times, there is some consolidation that happens from a vendor perspective. So in general, if you have a larger installed base with product to upsell and cross-sell into that base, we think you're going to do better as you move through this transition. So, we really like Microsoft here. We also really like Salesforce. The controversy on Salesforce has to do with people worried about their margin guidance and their margin goals. We have a high degree of confidence that this management team is going to execute against that. So, we like both those names as we sit here today. Then we also like some names in cybersecurity, and then Atlassian is another name that we feel very good about as we sit here today.